Please join Mindy Bartley, the Eastern Regional Processing Training Manager, during this session where she will cover income calculation options for processors. We would like to advise this training is for income calculation and data entry into FT360 before a file has been submitted for initial underwriter review. Please remember, once a file has been decisioned by an underwriter, no data on the 1003 should be changed by the branch, and no updated AUS should be run by the branch without direct authorization from your underwriter. Remember to follow your AUS findings and/or your underwriter conditions to document income in your file. Any additional non-required income documentation that is located in the file will be reviewed by your underwriter and may result in additional conditions. In this training, Mindy will be using PRMG's Income Calculation Worksheet. You can obtain this worksheet from PRMG's Resource Center, which you can access from a link in FastTrack 360 or from the Product Profiles and Resource Center link on PRMG apps as shown here. Once you're in the Product Profile and Resource Center links page, go to Retail Resource Center Forms, then from there, press Ctrl F on your keyboard and search for the Income Calculation Worksheet. This will bring you to the link to the form. Next, simply click on the link and it will download the Excel file.
Income calculation and data entry into FastTrack 360. This information is meant to be a basic guide to assist you. Please always refer to the PRMG Resource Center for current policies and procedures. Let's take a look at an income calculation worksheet. You'll notice it's an Excel spreadsheet, and there are various tabs across the bottom of the sheet that you can click on and go from form to form. We're going to take a look at income calculation option 1. Option 1 should be used for those wage earners that are salaried or that are hourly but work the exact same amount of hours from pay period to pay period without fluctuation. These wage earners should also not be receiving any overtime, bonus, or commission income or any other additional types of income. So for income calculation option 1, we're going to enter our income calculations in the gray area over on the right. We'll put an X next to the income type. Our test file today, Andy America, is a weekly wage earner. And then we're going to put his dollar per week here. So we're going to say he's $600 a week. And you'll notice that it will calculate the annual amount over here on the right in the total column. It will also calculate a monthly earning over on the left side. So his monthly earnings are $2,600 per month. Be very careful regarding the income type and understand how to read your borrower's pay stub. Please note there is a difference between biweekly and bimonthly. Biweekly is a pay period every other week, 26 pay periods in a year. Bimonthly is a pay period twice a month, which is only 24 pay periods in a year. Let me show you a sample pay stub. To figure out your borrower's pay period, please refer to the period start date and the period end date. In this example here, I can see that my period start date here was 9/16, my period end date is 9/30. You are not going off from the pay date of 10/1. If I look at the prior pay stub, I can see the prior pay stub was from 9/1 to 9/15 of 2018. So this example would be bi-monthly. So let's continue on to Andy America. We're going to complete his year-to-date 2018 earnings. It's extremely important that the from and to dates are correct in each section. Andy America started his job with Sunshine Ace Hardware on February 1st, 2016. Okay, so let's go ahead and plug in the figures. So year-to-date 2018, he's made $24,600. The prior year, $28,000, and the year before that, $28,800. Your underwriter is going to review the various income calculations to see if there's anything here that needs to be explained. So I can see current year to date, his average is $2,617.02. That's pretty much in line with his monthly calculation of $2,600. 2017, his monthly income was around $2,300 a month, And the prior year before that, in 2016, his monthly income was around $2,600. So I can see here already that there's something that may need to be explained in 2017. It is your job as a processor to make sure that you're able to tell the full complete story to the underwriter. There is a note section at the bottom of the income calculation worksheet. It's there for you to use and to be able to explain to your underwriter what is happening during that time frame. Well, in 2017, there was a hurricane that hit Florida, Hurricane Irma. The employer was closed for the month of September due to hurricane evacuation and repairs, but the business is back on track, and we can show borrower pay stubs to show income stability, and we had a note added to the verification of employment from the employer to confirm that the business was closed due to the hurricane. So if you have a valid explanation and you're able to support the current monthly earnings, that's what the underwriter is going to be looking for. Let's go to income calculation option 2. Option 2, you'd want to use if the borrower's pay fluctuates from pay period to pay period, and also if the borrower's earning additional types of income such as bonus, overtime, or commission. So in option 2, let's pretend that Andy America is an hourly employee. So we're going to say he makes $15 per hour. Again, the from and to dates are very important. We'll add our year-to-date earnings here and the number of hours. Now, it's important to note when you're filling out this option 2 form, this hourly portion or salaried portion down here, if the borrower is salaried, would be base income only. So you do need to split out your base income from any other income type that they're receiving, such as bonus, overtime, or income, or perhaps if they're in the medical field, it could be shift differential. So there is a spot here for W-2s for tax years, for prior tax years. Again, keep in mind, you're actually not putting the W-2 amount there, especially if the W-2 includes some of those other types of income. You do need to split out the base income from the other income types, which is why you typically would gather a verification of employment from the employer. Let's take a look at this VOE, or verification of employment. So here's our test borrower, Andy America. The employer completed it that he's $600 a week, but we have base pay here of $24,600 year to date, and they've broken out that he's been receiving bonus income back to 2016. And we have a remark here that in September 2017, the business was closed for 30 days due to Hurricane Irma. His average hours per week are listed here in box 15. So the average hours per week should match the number of hours listed on your income calculation worksheet. We're breaking out our base pay. You'll notice it will give you some various income calculations here. You have 4 different income calculations. Your underwriter will typically go with the most conservative calculation unless you can support why you should be using a higher amount. So again, your underwriter will typically go with the most conservative calculation, which would be the $24,5794. However, remember we had a hurricane event, natural disaster in 2017. So I'm going to request that we use the $2,600 per month and make a note at the bottom of my verification of employment regarding the hurricane. Now I can go ahead and plug in my bonus income. So I've put in my past year OT breakout for 2017 and 2016 to match my VOE. My current year to date bonus is $1,500. Once I enter my $1,500, and again, make sure that your from and to dates are correct so it does a proper calculation over here in the number of months column, it will give you your averages. Again, you're going to use the most conservative amount, And for overtime bonus and commission income, you do need a 2-year history of having received it, and it needs to be likely to continue. So I'm going to choose the $92.59 per month amount that my income calculator calculated. Now, how do we show these types of income on our 1003? So let's flip over to the 1003 page 2 in Fast Track 360. I have base income showing for my borrower of $3,000. That's likely what my loan officer put on the application based on what the borrower gave them. So I need to make sure that my income calculation totals match what I have on my application before I send it up to underwriting. I'm going to change my base income to $2,600 a month because that's what I can support based on the documentation that I have. And I'm going to plug in an amount for bonus. My bonus income I'm using is $92.59. And that is how I would show my Andy America's income. As we move down the page, you'll see that there is a whole section for commission. So if they're receiving commission income, you will complete the boxes as applicable. Again, make sure that your from and to dates are correct. You'll also notice that there's a section here for 2106 expenses. On your borrower's individual tax return, they may have a Schedule A as part of their return, which are itemized deductions. Here's a sample of one showing on the screen. If you scroll down toward the bottom, there is a section on line 21 for unreimbursed employee expenses. If there is an amount on this line, on this one that's $10,893, you must include that on your income calculator, and it will show up as a loss of income. So it's going to go against any positive income that you have in your application. But it's very important to look for those amounts. The other income section you can use for retirement income. So you are required to still complete an income calculator if you're retired. Our example here is for pension. Now for pension, you can just type in the word pension here. You can go ahead and put in your year-to-date income. So let's say we're $1,000 a month in pension. And let's say through October 12, borrowers made $10,000. Again, it's going to give you some calculation options. For pension, you can use the current amount that they're receiving. So I'm going to use other monthly and check that box. And it's going to populate over here or check the income you wish to use. Now I'm using the monthly amount of my pension based on my pension stub or direct deposit. However, I'm documenting my retirement income. Again, you must go to PRMG Resource Center and double check guidelines. Typically, your retirement income needs proof of continuance for at least another 3 years. There's also a non-taxable income section. This is most frequently used for Social Security, non-taxable. So you do need to confirm that the Social Security that you're plugging in here is non-taxable. You can gross it up by 25%. So I believe this auto defaults to 15. You can manually change it to 25 on the form. You'll go ahead and plug in the monthly check or direct deposit amount. So if you're using Social Security, you can go off from the Social Security award letter and use the monthly amount there. Or if you're going off from bank statements, then it would be the direct deposit. So let's say we have an $800 a month Social Security that we're documenting. You're going to plug in the income from the most current 1099 and then the annual amount of the income that is not subject to tax. You will check the box for the amount that you're using and you'll notice that the calculator will auto-calculate the gross up factor and give you the total amount that you're allowed to use for Social Security non-taxable. So how do you show this on your 1003? So we'll go back to our page 2. In the other income section, we're going to say this is for our co-borrower. You can do B for borrower in this column or C for co-borrower. I have C for co-borrower. The description, there's a drop down. So if we were using pension, we'd go ahead and plug our pension in here and put our $1,000 a month. It would look like that. For Social Security, there's a drop down for Social Security, disability income. It would look like this to match our income calculator. At the bottom of the non-taxable section, there is another section for that 2106 expense requirement. So again, if you are using individual 1040s or individual tax returns to qualify, you must look for the Schedule A if it's applicable, and take a look for that line 21 and see if there's an amount there on that line. Again, if there is, it's a deduction or an expense against your income. Just something to take a look at.
Thank you for viewing this training. If you have any questions, please feel free to reach out to your regional processing trainer or supervisor.